Hello, I'm Howard Friend, Chief Market Strategist at MIG Bank, and this is today's Technical Market Outlook. Dollar-yen is seeing some corrective weakness following the powerful recovery from 80.93, which confirmed an important reaction low above the 80.24 November swing low. The advance trapped sellers of the downside break of support at 82.34, suggesting scope for a powerful short squeeze. And I look for 81.76 to 82.86 to hold for an attack on the 84.51 December swing high, above which would confirm a base pattern which calls for a return to 85.94 ahead of psychological 90 over coming weeks and months. I would need to see the settlement back below 81.76 to signal a crack at key support at 80.24 to 93 ahead of the all-time low at 79.75 in a resumption of the long-term downtrend. Cable is seeing an acceleration of gains on the break above resistance at 156.65 last week as the recovery from 153.45 swing low extends. The breach of resistance at 169.11 to 160.13, if sustained on a weekly closing basis, would expose the 162.99 swing high ahead of 168.78 to 170.43 over subsequent weeks as the larger advance from the 142.30 May low extends. The failure to sustain the break above 159.11 to 160.13 would again shift the odds in favour of a topping scenario, which would call for an attack on the 153.45 to 156.65 area, below which would target psychological 150 over subsequent weeks. Euro-dollar is seeing choppy action inside last week's range as resistance at 134.57 to 99 caps for the time being. While action could remain choppy over the short term, the breakdown from the 142.82 swing high to 128.74 is seen as the first leg of a new multi-month downtrend, and I look for loss of 132.45, then 130.49 to 31.65 to signal a crack at 128.74, the swing low, the loss of which should then see an acceleration of weakness for 125 to 125.88 ahead of psychological 120 as the 142.82 bear swing extends. In the meantime, I'd need to see the settlement above 134.57 to 99 to suggest a stronger advance towards 138.60, above which would reopen the 142.82 swing high in a more positive multi-month outlook. Dollar Swiss is seeing some corrective activity as the rebound from the 93 swing low to 97.84 unwinds. The advance trapped sellers of the downside break of the 94.62 October swing low, increasing the prospects of seeing a powerful short squeeze going forward as trapped short sellers bail out of their losing positions. I look for 94.45 to 96.38 to hold for an attack on 97.84 ahead of the 10.66 reaction high, above which would confirm a large base pattern which calls for 103.31 to 106.26 congestion. The settlement back below 94.45 from here would again risk another crack at the 93 swing low ahead of psychological 90 before a major low can be attempted. Aussie dollar is starting to look vulnerable after breakdown from the 102.56 swing high. The decline trapped buyers of the upside break of the previous swing high of 101.83, raising the prospects of seeing a deeper setback as trapped break buyers bail out of losing long positions. I look for 99.39 to 101.21 to cap for breakdown towards the 95.37 swing low, the loss of which would confirm a top pattern which would call for a return to the 93.88 to 94.06 region ahead of 87.70 to 92.21 congestion support. In the meantime, settlement back above 101.21 would again risk an attack on 102.56 to 103 in an extension of the major uptrend. Euro-yen is seeing some corrective activity as last week's powerful advance from 106.82 unwinds. The rebound trapped sellers of the downside break of 108.34, and while 108.90 to 109.73 holds, the risk is seen to the upside for a return to 112.19 and possibly the 115 to 115.66 resistance band as a trading range takes shape. In the meantime, settlement back under 108.90 would suggest that last week saw a one-shot correction to the 115.66 to 106.82 bear swing, threatening breakdown through 106.82, 105.42, initially as the major downtrend resumes. Euro sterling is showing early signs of basing, having failed to sustain the break below the recent swing low at 83.34. Still, I'd need to see the settlement back above minor resistance at 84.99 to add credence to a basing call, which calls for recapture of 86.47 for an attack on the 89.41 October swing high initially as medium-term bulls regain control. Failing that, the loss of 82.85 would again risk breakdown towards key support at 80.67 to 81.42 initially as the 89.41 bear swing resumes. Euro-Swiss has seen a powerful recovery from 124.01 as the oversold nature of December's climactic decline becomes apparent. The rebound trapped sellers of the break below the 127.65 September swing low, suggesting scope for a good short squeeze, with 127.26 to 127.85 to hold for an attack on psychological 130 ahead of broken support at 132.29 as weak shorts are exited. In the meantime, settlement back below 127.26 to 65 would suggest that bears have regained control, risking breakdown through 124.01 for psychological 120 in an extension of the major downtrend. Gold remains vulnerable, having breached first thrust support at 1372.80 to signal failure ahead of the 1431.25 swing high. This increases the risk that a topping process is unfolding after the long bull market, and while 1393.30 to 1400 caps, I see risk of a return to 1265 to 1300 over coming weeks as the bull market correction looks to extend. I'd need to see the settlement back above 1400 from here to revive the bull market, with 1431.25 cited ahead of psychological 1500 over subsequent weeks.